为什么我听到一个杂音？
我有开音乐。
啊？
我有开音乐。你是听到音乐吗？
你有听到音乐吗？
嗯，我有听到。嗯，我弄错吗？
那我知道了，这好像是 user 自己那边的，所以每个人要自己按了才有。
哦。哎，可是你刚才按我有听到啊。
我刚才按你有听到？
对。
明哲，你有听到音乐吗？
没有，完全没有。
哎，怎么会这样？
哎，有了。他预设是关的。
我感觉好像是 user 自己要按的。
没错。
哦，对。
那边有一个。
我们先都把麦克风 mute。YouTube 那边打开声音有一个杂音。
嗯。
有一个背景杂音很明显。YouTube 的。
我没听到。
YouTube 是不是？
嗯。
哦，有，我有听到了。
哎。
到底是从哪里收到我的声音？为什么 YouTube 那边可以传出我的声音？
真的。
有一个很明显的声音。
嗯。
哎，我们是用哪一个麦克风？现在开的是？
我猜是收到 Kristen 那边。
哎，可是我这边没有。
我们开直播的机器是哪一个？
用我的这台电脑。
哦，哎，那
对，
有杂音吗？
不是，YouTube 会听到我们讲话。
全部听得到。
哎，没有吧？我听。
那一个看 YouTube 的让我去。
2分4就讲一下。
对，你要讲讲。等会再等3分钟。
是我把它开起来。
一半是我们的，等一下。等一下的机器人会一次进来100个。
Hello，有听这声音是有杂音吗？应该就 OK。没声音吗？对 ，OK， OK，
We good?
Yeah， 我看荧幕了。
All right. Yeah, I guess we're ready now then.
Yeah，
Okay. Well, hello everybody. Hope you're doing great. Welcome to the second edition of this term structure AMA. Hopefully, second of many more to come. And well, I'm gonna be your host this evening or morning, whenever it is that you're watching this. If you're wondering who I am, my name is Sergio. I'm a CK engineer for term structure. Right now, we're working on future upgrades of the protocol, really trying to push the boundaries of what zero knowledge proofs are able to do. But that's not what we're here to discuss about. We're going to be talking about the testnet that we just launched and it's live. And you can try it out already at app.testnet.ts.finance. I'm sure someone on the team will post that in the chat, so you can go ahead and post your orders there. And to discuss that, I'm joined here with our CEO, Jerry, who is the real visionary behind the protocol here. So, Jerry, why don't you give us a short introduction?
Yes, just quickly to introduce myself first. I've been working in investment bank for 25 years. And just last year, the first quarter, I decided to leave the bank. And then because I wanted to build a fixed income protocol in DeFi. Right? During the 25 years in the banking industry, what I was doing is trading on the fixed income and the currencies. And managing this the bank's portfolio for like more than 10 years overall in the region. So I found that the DeFi world is like a fixed income, which I believe that is the foundational infrastructure that any financial ecosystem should have. So that's why I make my decision. I wanted to spend my like a full time dedicated into this like a DeFi space. So I built a company. I set up a company last year, and then built this protocol for a year and a half. And right now we are presenting term structure to you guys.
Nice, thank you. So, just before we get started with the AMA, let me just give a quick overview about the format here. We're going to be going over a couple of key points, trying to bring you guys up to speed with what it is that we do. And then we'll open the floor to some questions. So if you have any doubts, any questions, just feel free to post them here in the Discord chat or on YouTube, and then we'll do our best to answer them. So now, with that out of the way, let's just get started with these key points. And I think the first thing really to focus on is the name itself, term structure, because I feel like it's very integral to what we do. But very few people in the space, even in DeFi, know what it means. And I mean, I'll be honest with you guys, I didn't know what it meant before I joined the team. So maybe we can start by that. What does term structure actually mean? What does the phrase mean?
Yes. Okay. So actually, the term structure is is also the word that I learned in like financial engineering in a graduate school. So term structure is it's like a finance terminology that we use in TradFi, right? So the term structure of interest rate means that the relationship between the fixed interest rate and the time to maturity for bonds. So if we plot the relationship onto a chart, then you will see a curve. We normally call it yield curve. So this is so-called term structure. And term structure, our protocol is looking to construct this yield curve with primary market, secondary market, and the ripple market of fixed income, just like what we see in TradFi. Right. So what is primary market? Primary market basically is a marketplace for people to borrow and lend fixed interest rate of a fixed term to maturity. Right. So we will have an auction process just like what people do in US Treasury market. And the secondary market is the marketplace for people to trade the fixed income instruments. So we will have like a so-called similar to the bond tokens that carry the interest, carry the coupon, right, with the principal. Like the people, particularly for the lenders in the primary market, will get the fixed income token to use that to trade or to manage the risk in the secondary market. And then, of course, we will have a repo market similar to TradFi World that the user can use this the fixed income token as a collateral to borrow the tokens, like base tokens. And by using this, the users can do their financing, cash management, or this leverage purpose. So we just trying to build the whole fixed income market and bring that from TradFi to DeFi.
Right. So I mean, I guess the follow-up question is, why do we need fixed income markets? I mean, we already have in DeFi, we already have lending and borrowing. So what's the appeal of building a protocol like this? Why do we need a fixed income market in DeFi?
Okay, the term structure or the fixed income is important because it unlocks many use cases like in TradFi in our like a real world life, right? So if you can think of that, if you wake up tomorrow, the U.S. Treasury market disappeared. There is no fixed income in U.S. dollar. Then what is the impact to you, right? I would say like 90% of the debt financial instruments will be gone because all the instruments, like if you see settled or trade beyond today, needs a discount factor, and the discount factor comes from the fixed income curve, which is a yield curve we're talking about, right? Without that, I would say 90% of your future cash flow planning or the financial product valuation will be gone, right? So that's why this is so important that if we don't have this like fundamental infrastructure, the DeFi would not grow, right? We won't see the organic growth on that. So that's why I think this is very important. But today there is only a handful of protocol touching fixed income, right? And but we don't see anyone doing that with a full scale, like what we are trying to achieve.
Right. So I mean, in TradFi, like it's the baseline, is the sort of the foundational stone of the entire TradFi ecosystem. So why should it be any different for DeFi? That's kind of the way I see it. So I'm guessing that's the reason really why we need a term structure protocol. So let's just get a little bit into how that actually works in practice, right? The testnet that is actually live out there. How does it actually work? Just to give you guys a quick rundown, it's basically a ZK-rollup, but it's in a specific ZK-rollup. It's not like a general purpose ZK-rollup like the Polygon ZK EVM. We're really just trying to make a rollup that's optimized for our protocol and our protocol only. And now I'm guessing the question here is, why do we need a rollup? Why don't we just build the protocol directly on Ethereum, or why don't we just deploy it to a layer 2 and save up on gas fees? What is the reason behind that?
Okay, I may take a little bit more time to explain that to you guys. So I think the fixed income product is a very special financial instrument. It is the cash product, and there is no leverage like options or futures, and there is a maturity. It's long dated normally. So when people doing the fixed income products and investing in it, I think we should not use what we've seen in a peer-to-pool model. Like for example, if we take Aave or Compound as example, right? So there is like a certain degree of capital inefficiency, right? Because if you have 4 billion of deposit and they only lend out 1 billion, all right? So the 1 billion pays like 4% for borrowing, and then the 4 billion only get 1%, like on average, right, to everyone. So this is a big problem because there are like 3 billion idle cash, right? So that's why we, as a fixed income, can you imagine that there's a 1-year bond, the borrower pays 4%, the lenders, the bondholder, or the fixed income token holders can only get 1%. Right? This is not going to work. So that's why we needed to think of a peer-to-peer model. And the other things to think of is like so the people get used to the automatic market maker, right? With that, the user can only take it or leave it. If they like it or they don't like it, the price is shown by the formula of the protocol, because this is not the overall the MN will give you the price based on the supply and the demand on that particular protocol. It's not about the general market agreed with what the price should be traded. So we wanted to build up auction-based or the order book-based model where the user can place their bid or offer, right, for the primary market or secondary market. Right, you decide your price, and you can leave an order, or you can just use with a limit order, or you can use market order to trade. Right, so we want to build this, and also that with peer-to-peer with the order book or auction, the problem is that on Ethereum you're going to pay huge gas fee. Right, we wanted to find the scaling solution, so that's why we think of how should we do that a year and a half ago. Right, so we make a decision to develop our in-house zk-rollup. We call it zk-True-up. So build this zk-True-up contract on Ethereum, and then we use the off-chain calculation, right, with zk service behind. Right, so that's why we can have the primary market auction, secondary market order book matching, and to bring this up. But you may wondering why do we want to build our own zk-rollup? Why don't we use the other L2, right? I think there's a couple of reasons. We struggle a little bit, and before we make a decision. So first of all, fixed income, we need huge liquidity. So where is the liquidity? Right, the liquidity is on Ethereum, right? So we want trying to stay on Ethereum so that the user on Ethereum will be able to deposit straight away to term structure and to place order. Right? So we want to make this the user experience that smooth. So we wanted to build a DApp term structure on Ethereum, and with the off-chain calculation behind with zk-rollup to support. And also, we don't want the user to pay high gas fee and or maybe certain like a layer 2 fees. So we can decide the fee schedule so that we wanted to waive the users to pay fees when they place order or cancel order without any transaction done, right? Any financial transaction done. I mean, so before you do any trade, you don't want to pay fee, right? You just don't want to. I place an order, cancel order, then I got to pay layer 1 or layer 2 fees. So we wanted to avoid the users to have that kind of experience. And also, we want to leverage the dApps on Ethereum so that we can have a better ecosystem to work together with. So when our user withdraw our bond tokens or fixed income tokens from term structure, it will go straight away to Ethereum to be able to interact with other wallet services or other crypto service providers or other protocols. So that's why we wanted to build this. And also, we consider the composability, right? Because we do zk-rollup, right? And then so that all the debt position, the borrower's debt position will be on-chain and with data availability, and ensure the data integrity by the zk-rollup, and so that we can build certain functions. For example, the liquidation bot will be able to liquidate the debt position when the collateral value drop below the threshold, which is exactly the same as what they're doing on Aave and compound liquidation process, right? And also that we can also build up the composability with Aave. So for those people who has the debt mature, they can roll over to Aave and then make it a non-maturity date in their position. So this is, I think I would say this is the useful for our user. And of course, some other consideration, including the certainty of the development timeline, right? So because we were just adding on the more features continuously. So we want to make sure that we can control the steps of our development, because this is a core like features of our term structure protocol. And also the flexibility of a business consideration. Think of that, we have built forced withdrawal evacuation mode. So that this is very important thing that we wanted to make sure the users are comfortable with us and that they can withdraw whenever they want without worry about the censorship. So that's why we build on our own. And then of course we can also decide the roll up frequency. We can decide on when to roll up. Right? So there's a lot of flexibility or the choices we may have if we make these ZK-rollup in-house. So that is my answer.
Okay. Yeah, thank you. If I may summarize, because I see a lot of new people have joined in. I mean, there's several reasons why we sort of have our own system design for what we do. And I mean, you covered, well, the development certainty. We don't have to depend on what another layer 2 is going to do. There's also the issue that it feels more like a TradFi application. You don't have a gas fee for placing an order, which is, for a TradFi guy, I'm sure that feels a bit counterintuitive. Why would I pay to place an order? But I think my favorite reason of them is just that it exposes you not just so much to the liquidity of Ethereum, just building your own rollup, but the ecosystem as a whole. And really, that's the beauty of DeFi, as I see it, is the ability to compose different protocols, right? There's countless examples of this. Like you have convex finance, which is built on top of curve finance, right? So I'm really, since we believe that the term structure is the baseline of TradFi, essentially, the traditional finance world, if we are to move that onto DeFi, well, it makes sense to have this available on Ethereum. And really actually excited to see what people can come up with once they are able to get their hands on the actual token bond on the main layer, and to see what kind of new projects they are able to build on top of that. So anyway, now that we've gone a bit over how the protocol works and all these details, I think it's important, interesting to see, just step back a little bit and see where are we today as a team. I mean, obviously we just launched our testnet, but what other stuff do we have going on right now at term structure, and what is our roadmap essentially?
Right. Okay. Just let me update. We have announced our testnet last week, and at the same time, we announced our seed round fundraising close with strong support from our lead VC, and which is Cumberland DRW, and also a couple other the crypto VC firms. And so right now we will continue to run this testnet until the Q1. I will say late Q1 in next year, so that we will launch our mainnet. And when we launch on mainnet, we will add on the 2 extra collateral type of token, which are SDAI and also WSTETH. So we were adding on these 2. And when we launch on mainnet, we will have a SDK ready so that the API traders will be able to use that frequently with like a frequent order placing or cancel or trading, right? So we will just create a much user-friendly environment for the API traders. And also there's more potential new features we were going to add on, that including the term structure rollover, right? If you have a date maturing, you can decide to come into the primary market to roll over before the maturity date, so that you can extend your maturity date. And also that we will add on the features of a deregister, right? So for example, if you have the date maturity at the end of March, and then what you can do is you purchase the same fixed income token and on the same maturity date, and then come back to term structure to deregister, so that you will be able to trade this the fixed income token through the primary market. So that if you borrow certain tokens at 5%, if it's traded at 8% in secondary markets, you can buy it back and deregister it to realize the 3% of profit. And also we will have a term structure swap. So for those who have tokens deposited to term structure, you can do swaps within term structure without a withdrawal to Ethereum. day one. Right. So, and I think there's another thing I wanted to mention that which is the most important. Or we will have a second phase to incorporate into real world asset. Right. So once we have this the term structure infrastructure running, and we will definitely add on some of the real world assets as eligible collateral, so that for people to be able to borrow fixed interest rates at a fixed term to maturity. Right. Just like, for example, if you purchase the real estate in real life, right, in real world, what you do is that you go to the bank to get the term finance and the fixed rate. That's what you want to do, right? And what if you make your real estate into a token? What can you do? Can you do that? Right now, there is no protocol helping you to do that, right? So we want to be somebody that will be able to provide you that kind of service. And of course, that we are talking to different other layer 2 chain. And then I think once we are being like building up like full steps like seeing here on Ethereum, then we were going to move on to other chains as well. And some other new financial products, right? You can think of like futures or forwards, right? Some like a stable coin forwards or some other structured products. I think without fixed income, it won't be like developed where there is no scale for those structured products, right? So this is something that we are like we hope that we can help the community to build that together.
All right, thank you. Now, before we actually jump into the questions, just like one last thing, because well, we had related to the testnet. Basically, we had the workshop yesterday, which I'm sure is re-uploaded on YouTube. You want to check that out. We have the AMA ongoing right now. What else do we have going on regarding the testnet?
Okay, so yes, right after the workshop yesterday, and I think we are. So if you missed that, you can watch that the recorded video again. And we will have a trading competition. We plan to host that in January, and there will be a 2 weeks of it's a trading competition where that we will you can test your trading skill on fixed income, and you can try to plan your trading strategy, and you can think. I would advise that you to look at other DeFi or CeFi fixed income or fixed interest rate products to compare with that, and how do you use that to trade the relative value of different products, different platform. And of course, we will provide the price, including the $10,000 incentive, right? So these are all the planning we have for this trading competition, right? And you can also join this mission on the Zili, that where I believe some people already have already on it. And for those people who are in Taipei, where we are based, and the following 2 weeks, that we will have quite some blockchain activities, Web3 activities. So there is a Taipei Blockchain Week next week, and we also host like a ZK side event, and welcome to come to join us.
All right. And well, before we start with the questions, just want to make it very clear: trading competition is on testnet, so there's no real funds going on. You're really just getting to play around with the protocol, and who knows, maybe you make some money out of it. So go ahead, try it out on app.testnet.ts.finance. You can find that in the chat. And now, if you have any questions, you can post them here on the Discord chat, although we already have some of them, and we'll start answering them. So the first one came from David Brain, who asks, well, since term structure is peer-to-peer, it means there must be a corresponding lender for a borrower to sort of complete the transaction, fill the order. So what happens when there is an imbalance? What happens when there's no match on the other end?
Okay, so this if there is no match on the other end, it will be similar to what happened in TradFi. right? So you can see in TradFi when there is a corporate trying to issue corporate bonds through the investment bank, like a debt capital market process, and if they cannot find enough lender, then of course they will just issue less less bonds than they expected, and the price may be adjusted by the borrower, right? If there's like an over demand through the auction process, the bonds, the bond tokens, the fixed income tokens will be auctioned out with a result lower than the borrower's like a preferred interest rate. So let's say, for example, maybe I can just bring up this the process of the auction. Right, so the borrower will come up to be sorted by the time when they place order for each auction, and the lender will be sorted by the level of interest rate they want to lend. Right, the lower the interest rate, the higher the priority. Right, so with that, we go through the Dutch auction process. Right, and if there's no match, your order will continue to stay on the order book for 7 days.
Right.
And after 7 days, it will be automatically removed, and you need to place order again.
Right. It's kind of like, and correct me if I'm wrong here, but it's kind of like if you set a limit order to buy Bitcoin at $12,000 right now, it's not going to fill. Like you would have to wait if it ever drops
Yes.
to that level. It's kind of like the same thing.
Yes.
So yeah.
Yes. What we're trying to do is we just provide a platform for people come to here to meet with each other to trade at their preferred price.
Yeah, exactly. To sort of have like a TradFi feel to the platform.
Right.
So second question came from Sam, who asked, well, is this a OP stack based chain? And well, maybe I'll just jump in and answer this one, although I see that it was already answered in the chat. We are essentially a ZK rollup. OP stack is like an optimistic rollup. We decided to go with ZK because it's just, well, more certain. Essentially, yeah, once we verify a proof, getting a bit technical here, but once you verify a proof, the transaction is final. There's no sort of, yeah, you achieve faster finality basically. And then so we have some other questions. Question from YouTube: if there, like, is it necessary to use order books? He asked. I'm guessing that refers to the protocol. I think we covered that already, but I think it's a very key point. Why do we use order books and not a peer-to-pool model?
Yeah, maybe just to quickly recap again, right? So the order book is basically for secondary market trading, so that we wanted people to be able to place order and on their like preferred price to trade. So for example, like if you seeing the Bitcoin futures trading on CME, is the has a different implied yield, or if you see there is like a certain the floor price on any like a centralized exchange platform has the different price than what you see in the fixed income token price on term structure, right? You can place order and to get traded so that you can do arbitrage or trading, or you can just use the market order to take it, right? So if we use like an automatic market maker, and the price level will be only be on based on the supply demand of loan to value of the protocol, right? It's not across the whole market where you can place order to trade at your preferred price.
Right. Yeah. It's gives more flexibility essentially, not just having to deal with what the pool decides. And we have another question from YouTube, trader guy design, who asked, well, is there any further plan on the roadmap? Well, he wants to know if we're thinking about adding other tokens like Link or Cardano maybe, or some sort of other popular tokens.
Yes, of course. That this is the first 5 token you've seen on testnet is the just the beginning, right? And then I just mentioned about we're going to add SDAI and the WCETH, And going forward, we were going to add on more and more. But of course, that we will be cautious about the liquidation process. So for those tokens who has less liquidity across different platforms, we may not add it on because we need the liquidation bot to help us to secure the protocols like safety and also these lenders comfortability.
Okay. Well, we had another question here on the Discord, but I'm not really sure what he meant. He was referring to TS-ETH, but that's the sort of the name that we've given the Ethereum token just for the testnet, just for our testnet version. But yeah, I'm guessing it's kind of like the same answer as you just gave, sort of the tokens that we are looking to support right now, and what we'll be dealing with in the future. So let's see if there's any more questions. Yeah, another question from YouTube actually. Will you have an API for trading since you got the order book already? Is there an API essentially to trade right now?
Yes, we will provide the API for the API traders to use. For sure, that we will have.
And that will be available on mainnet, I believe.
Yes.
Okay. Yeah. So okay, there's another. Well, I think we cover that, right? Like we are gonna support on the mainnet. We're gonna be looking to support 𝙯𝙠𝙏 and wrapped staked ETH. So let's see if we get any new questions. I think there's a sort of on the 𝙁𝙪𝙚 there's like a one of these tasks, so you might get some utility in the future. Yeah, another question here from David Brain. Beyond the TSB tokens, will there be other token available for trading on the secondary market?
Okay, so right now, the TSB token that we designed today is for the fixed income tokens that carry the principal plus interest. So, so currently our secondary market is basically meant for that only. So we also plan, as I mentioned, like we will have some the futures or the term futures or the forward planning. So if once we have those other derivatives that we were going to add on. But at the moment, I will say we start with the fixed income token, and we will focus on adding on the more different type of tokens or some cross-chain efforts and some RWA projects together with working on with certain like RWA service provider too. Right. So I think these are more important for us to move on. And then once we get this ready, and then we will move on to the different type of financial instruments. Right, and then that will be shown in different kind of token.
Right. Let's see. Oh, Daffy wants to know what was your previous project, Jerry.
Okay.
I don't know what he means by that.
Okay. This is my first project. Just like what I said when I introduced myself initially. I retired from the investment bank last year, end of March, and jump into DeFi and to develop this protocol. So I was in a bank, in the investment bank for doing the fixed income trading and currency trading for 25 years.
Yeah, first
Correct,
DeFi
the
project,
first
yeah.
DeFi project.
So we have another question here from YouTube. Can the protocol censor users' assets? I think it's very important to know. Well, if that's the case, it's not the case, but can you explain why that is not the case? What can the protocol censor user assets?
Sorry, what's that again?
Can the protocol censor user assets? Essentially, can we steal your money, basically?
Sorry, your line is cutting off.
Yeah, sorry for that. But essentially, the question is, can the protocol
Hello?
censor? Some technical difficulties here, maybe.
Okay, so the can the protocol censor users' assets? Okay.
Yeah.
We cannot, right? Just like I mentioned, we have built. So our protocol basically has been audited by two audit company already. That is ABDK and 𝙁𝙪𝙚, and we have also built in the forced withdrawal and evacuation mode. So forced withdrawal, that means the user can request to withdraw from term structure protocol, and we have to respond. If we don't respond in a certain period of time, then the protocol will be triggered as the evacuation mode. That means at the time, all the function will stop working except for the withdrawal. So everybody, all the users can just withdraw and without doing anything, and then our protocol will just shut down, right? So with that, that is guarantee that the user can withdraw their SA as they wish.
Right. Essentially, like the protocol is just non-custodial. We do not hold custody of your funds.
Correct.
You remain the sole custodian. Like all we do is just match lender and borrower. But if you want to get out of the protocol, you're always guaranteed a way out. So another question from YouTube is from Betam. I hope I'm pronouncing that right. How about trading fee? Well, yeah. What is the trading fee in our protocol?
All right. Okay. So the trading fee, we have mentioned on the our documents on our website, and on the trading fee, we will charge 10% of the coupon from the borrower, and to lender, we charge 0.1% per annual interest rate. From lender, right? And on the secondary markets, we will charge market taker 0.3% per annum interest rate on the fixed income token, and the market maker will charge 0.1% on these per annum interest rate.
And I think you can check that on our docs. All the sort of all the fees structure essentially. It's available on our docs. Hopefully, a member of the team posts that in the chat so you can see it, or if not, you can go into our docs on our website, and I'm sure you'll find it there. Sort of the fee structure explained. Yeah, there you go. Docs.ts.
And we only charge when there is transaction done. If you place order, cancel order without doing any transaction, there is no charge.
Yeah, exactly. Essentially, it feels like a centralized exchange without being one. Like when you submit an order to buy something, it's not going to charge you until the order is filled. So another question for YouTube, and I think this is a very good one. What are the use cases? Basically, what can you do with this fixed income?
Okay, there's lots of things that we can do with fixed income. For example, I would say there is the for those who are familiar with liability and asset management, you may think of that for the stablecoin issuer, right? So currently, stablecoin issuers they are holding on to 100% of their liability being the current liability. That means any user or there's a stablecoin holder can request to redeem at the same time, anytime, right? And 100% of token, if the 100% of the token holders come to redeem, right? And then no like not even one like a stablecoin like a issuer can survive, right? So what they need to do is they needed to issue through this bond issuance or like a fixed income token issuance program, they place the collateral and to borrow 1 year. Let's say, for example, like a MakerDAO can borrow 1 year DAI at 5%, right? So instead of paying 5% through the SDAI, right? With that, the 5% paid will lock 1 year DAI token, right, in the treasury, right? So in that situation, when there is a bank run, these guys won't be able to run, right? This is exactly the same as the banks like Bank of America, or the HSBC. They issue bonds from the market, right? From the real world, right? So this is what one of the use cases, right? And of course, for the miners, right, or for those who has the BTC, right, they can put the BTC as a rep BTC to place as collateral and to borrow and USDC or other stable coins. Or if they wanted to hedge the Bitcoin price from falling in the next the coming 6 months or 12 months, right? They can borrow BTC, right, and to short sell, right, to lock in their funding cost, right? And for those like asset managers, if they wanted to make sure they have a secured fixed income token, right, and with non-custodial put into these their like a wallet, and they can simply just come here and to purchase the fixed income token to earn fixed interest rates.
All right. And we have here another question, actually. Question from YouTube, actually. Will you have a further fixed income product in the future, like structured products, for example? I think it's part of the roadmap, but maybe you can dig into a bit with that. I guess it's linked with the previous question, actually.
Okay. Yes. So it's similar to the previous question. I can add on more. Right. And hopefully, like most some of you guys can understand with the TradFi background. So, for example, in the fixed income bond token, right, we can add on the put option, right? So if you have an Ethereum as the if you have let's say if borrower has the Ethereum as a collateral to borrow USDC, and if you are a lender and you lend USDC, you get this fixed income token, right? We can combine that with the put option so that you can make it as like a dual token investment. So and we can overlap with the put option, right? So that whenever like for example, if Ethereum drop, right, you might be able to forced to convert your USDC like a lending amount into into the Ethereum amount, right, with the fixed strike price. Or we can think of that if you have a SDAI or a fixed interest rate return and use that as a collateral to borrow ETH for 6 months at the fixed interest rate. So that means I receive 6 months interest rate on the fixed interest rate on DAI, and I pay 6 months fixed interest rate on ETH. And then effectively, I have a 6 months forward price of ETH against DAI, right? I can trade forward based on that. And I can trade like term futures, or I can use that to trade against other DeFi funding transactions, right? So these are the potential like the synthetic products we can think of.
Right. Another question from Peter on Discord. Can one bond token be exchanged for another bond token?
That we haven't planned for doing that with the bond to exchange versus bond, right? So for at the moment, the user will sell the let's say ETH bond token and to get the ETH, and then to buy, let's say if he likes USDC bond token, then they needed to convert that to USDC to purchase USDC bond token.
Right. But it's something, I mean, it's something that you could do potentially on the layer 1, just using the composability of this protocol. If you wanted to build that on top, you could, and just do exchanges of bonds. So
Yes. But of course, we're happy if there's.
Yeah, no, go
Sorry.
ahead.
I'm just saying. Yeah, we're happy if the developer will be working together, and then we wanted to build the ecosystem, and we can think about how to do that together. I think it's doable, but we just needed to move step by step.
Yeah, exactly. It feels like a bit more further in the roadmap. So another question from YouTube. How do we guarantee that borrowers will repay their debt and that lenders will get their investment back, essentially?
Sorry again.
Like, how do we guarantee that the borrower will repay the debt that they're due?
Right. Okay. So I mentioned earlier, we have the liquidation process, which is exactly the same as Aave compound. Right. So for those debt position, it is transparent, like a public, like data shown on chain. So the liquidation bot will be able to monitor the health factor and to do the liquidation when the collateral token value drops below the threshold. Right. So we are pretty much similar to have the same like a liquidation process. This is that's why it is very important for us to choose what kind of token will be eligible collateral tokens.
Right. Yeah, because you need something that's not too volatile. Because if not, yeah, it's gonna dip under the threshold too fast. And another question actually related to that:
Yeah.
if you're a borrower, how can you prevent liquidation? When my loan is matured, yeah. Once the loan is matured, how do you prevent liquidation?
Okay, a couple of ways, right? So there is one way is that if you have a token to repay, then you can do the repay, right? And at the before the maturity date, or we already have put on the roll to Aave. So if you don't like today, and when you have a maturity date, and then you don't want to extend to the next maturity date, you can roll use the flash loan to roll to Aave, so that your debt will become non-maturity date, right? Or you can decide to roll over before the maturity date on term structure by placing the bid to borrow in advance before, like a couple days or 1 day before, right? And then if you cannot cover or extend your debt position to the next 3 months or 6 months, then you can decide to roll to Aave to wait for your right level to come back.
Right. And another question actually regarding liquidations: are there liquidation calls before a final liquidation? I'm guessing.
What does that mean
Uh,
for the
yeah,
final liquidation?
I'm guessing he refers to just liquidation calls before, like getting margin called. I'm guessing that's kind of what he refers to here. Not sure.
I think there
Like,
is no margin call before the liquidation, because on chain it's just once you hit the liquidation threshold, the bot will just jump in to rush in to do the liquidation and for incentive. So there is
yeah,
on chain there is no like a margin call. It just goes straight to liquidation.
yeah. Essentially, just is there a notification that you're about to be liquidated? I guess it's something like front end wise that could be added. But is there a notification? Yeah, if you're about to be liquidated, do you get notified? I think there's a bar where you can see the state of the sort of the health of your position.
Yes, it's on the health factor. So we will your debt position on the if you see on testnet under your wallet, you will see your debt position with the health factor, and there is the color, the heat map color bars to help you to see if your position is going to get the liquidation threshold. And there is no currently on chain. There is just like other DeFi protocol. We don't have a notification.
Right. So a couple other questions here. Got one from YouTube. Is can I trade other token or forward futures in term structure as well at some point? I'm guessing that's referring to the future of the protocol, the roadmap.
Yes, it's on the roadmap. So fixed income is a fundamental instrument for the most of the data instruments, like over 90%. So futures, if you heard about the interest rate parity, help you to price the full price or future price of two different currencies. So with 2-year curve across two different currencies or tokens, then you will be able to find there's a full price for different currencies or different tokens, right? So this is once we build fixed income protocol, then the term futures, the forward price will come up sometime in the future, and we will be part of the game.
And well, again, another one that has to do with the roadmap essentially. It's right now, on YouTube. The question that is, well, they can already see the primary markets and the secondary markets live on testnet, but can you actually swap Ethereum for wrapped BTC on the protocol?
Okay. So right now, not we haven't developed that particular part yet. We'll think about that. That is the I think we will working out not just for that, but of course for different tokens. I mentioned about we are looking at a swap on the term structure, right? So on other layer 2, they may call it a layer 2 swap, but it will be our within term structure swap.
Yeah. And well, another question from YouTube. Do we have a flash loan? Is it possible to just... Sorry?
Sorry, no problem. Sorry, go ahead, please.
Oh, yeah. The question is, do we have a flash loan? Is it possible to just, well, take a flash loan from the smart contract?
Sorry, I think your line cut again. Okay.
I think we have some...
Oh, yes. Yes, we have a flash loan. So flash loan, we have a flash loan. So with flash loan that you can, we already have we already developed deployed this flash loan in our term structure protocol. And you can also use this flash loan to roll to Aave.
Right. Okay. So I don't know if there's any more questions. Yeah. Actually, a question from YouTube. Well, essentially, is there a page on the testnet page? Is there somewhere to see the profit and loss of someone's wallet?
Wait, I cannot hear you. Fine.
Yes.
Okay, so currently we don't have the P&L calculation for term structure, but I can give you what we are doing behind the scene is that we are building up another term structure pro, which is for professional API traders, and for that particular version, we will come with the P&L calculation, accrued interest calculation. We want to hold to maturity, or the year, or the different curve, year curve, or the different notional size with certain different bit of a spray, right? So, and we also have like a distributed order system for the API trader to place and cancel order just within a few seconds. So there are some other useful tools that we are building out, but that will come a few months after. After we launch on mainnet.
Okay. So I think our time is about to run out. So if you have any sort of last questions, you can post them now. Yeah, I'm not sure. Don't think we have any more questions. Oh, well, there you go. And ETA for mainnet. I think we discussed that Q1 next year.
Yeah.
And yeah, I think that's about it. If I may say, I'm surprised no one asked about airdrop or any of that stuff. Maybe next
That's good.
AMA for sure, someone will ask that question. But yeah, I think we're gonna end it up here. Thank you so much, guys, for showing up and asking your questions. Really excited to see what comes out of this. Really. Just to wrap up, there's a trading competition going on. Well, we're gonna start that in January. You can already play around with the testnet at app.testnet.ts.finance. You can play around with it, but make sure that on January, you can play with it and hopefully make some money while you do it. So yeah, that's it for today, and we'll hope to see you in the next one. Thank you very much again, and
Thank
have a
you.
great day, everyone.
Thank you very much.
Thanks.
Thanks. Bye bye.
See you guys.